This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
So we're now officially a few weeks into the month of January. The holiday cobwebs are hopefully fully cleared out of your head. I was this past week in my office. One of my buddies, Chris, brought over this little cream puff thing. And I was like, what is that? And he was like, it's from this bakery that I just dropped off. And I was like, I'm trying to detox. I need to get the sugar out of me. It's like,
that's right. You got to say no. You got to say no. Yep. We're in January. Time to, for me personally, at least, get back on the wheel here and get some of that holiday weight off. Had a great holidays.
Are you doing the water fast thing? You and I have a mutual friend who's like the freakiest of all health freaks.
I've actually never done even a 24-hour fast, but I probably should. I hear this.
I thought you and Thomas were going to do that water fast thing together. Are you bailing on him? Does he know?
Never done one before, but maybe I should. Maybe
I don't know. I don't know. The water fast thing, we're not here to give health advice. So if you're thinking about a water fast, we are not endorsing it. Please take care of yourself. Make sure you check with your doctor before doing any of those kinds of things. Abe, let's stick to the stuff that you know about, okay? Sure. And let's talk about what to expect in this new year. Obviously, the calendar has turned again. There's lots of opportunity. That's what you're, of course, helping us to seek and to find for 2026. Economic challenges still persist. We're seeing baby boomers continue to retire at record numbers. Prices are still elevated. Social Security faces its ongoing challenges. Rather than hoping for the best, smart savers, a la the people that you see every day at Abich Financial, they're taking action to strengthen their plans despite the external factors. Abe, what are some opportunities that we can consider for this new year?
Yeah, look, Heather, there's always going to be uncertainty, right? Especially in the world we're living in right now. But your financial future, we're at the beginning of a new year. Time for a new slate. Like, wipe the slate clean and, get your financial house in order if it isn't. There's so much that is uncertain out there, and your financial plan or retirement plan doesn't have to be one of those things if you just simply make it a priority.
Right.
And take control as much as you can when it comes to the planning. When you've done as much planning as you possibly can do, that's all you can do. Right. And when you do comprehensive planning and you look at all of the different pieces of a comprehensive financial and retirement plan, it's going to give you that added clarity. It's going to give you that added confidence as you head into 2026 and beyond, which you need and deserve. Because you've worked for 30 to 50 years to get to the point of retirement. You deserve it and you need it. Don't put it off. Well, whether the markets are going to have a fantastic year, whether they're going to have a so-so year or down year, there are always opportunities and we need to be aware of them. And so 5 quick ones right here. Obviously, first off, you want to review your portfolio and assess how you did in 2025 and how you're positioned to do for the future. And I would ask yourself, if you're at the goal line of retirement or just into retirement and you have the money that you need, you've won the game to retire successfully for the rest of your life, what would happen if the stock market dropped by 10%, 20%, 30%? Now, 10% drop is not too much, not too big of a drop. A 20% drop, bigger. But we experienced that actually in February, March of 2025 with the tariff volatility, right? But look what the S&P did. It was resilient, and it swung all the way up to a positive 16, 17% for the year, a 37% swing. Well, the markets aren't going to do that all the time, right? So what would happen if your portfolio dropped by 30%? Could you live the retirement of your dreams if that happened? You may say, yeah, I could. I'd just wait a year or two. I've got some cash on the sidelines. I've got some annuities. I've got some safe money, some treasuries, whatever it is to weather those downturns. Then great. If not, and you're in the Mag 5 or Mag 7 and you're heavily invested in tech or whatever it is that could be exposed to a bigger loss and you lost 20 to 30% of your life savings, would you be okay? If you answered no, then you've got to make some changes. Take advantage of higher contribution limits in 2026. Every year, the IRS allows us to contribute a little more and more each year for a cost of living adjustment there. And the contribution limits have gone up for 2026 as they do again every single year. If you're 50 and older, you can take advantage of a catch-up contribution. If you're between ages 60 to 63, there's a super catch-up, which allows you to contribute even more. Make sure your plan is hedged against inflation. If you have the opportunity to use an HSA, triple tax benefits there. You want to really look for the opportunities if you're able to contribute to an HSA. And finally, get intentional about your legacy plan. If it's spend every last dollar down, fine. If it's to pass money on or a lot of money on to your loved ones, you need a plan for that.
Yeah.
So
yeah.
5 quick tips there for 2026 and looking for opportunities. And speaking of that, we just helped a couple that is in Manassas, Virginia, about $1.5 million saved, retiring in 3 years, mid-60s. They desire to be around a 70-30 allocation. Their problem was that they had no plan to retire. So they've got $1.5 million accumulated. They've worked for 40 years to get to this point, and they knew how to save the money, but they don't know how to retire, which is the case with so many people that we meet. Well, Abe, I knew how to save it. I knew how to accumulate it. I knew how to take advantage of, matching contributions and maxing out my employer plans and getting, stock from my company and pensions and all these things, but I don't know how to put it all together. That's not my expertise or specialty, and we need your help. Pension decisions, Social Security decisions, IRAs, 401ks, brokerage accounts typically can benefit from consolidation, from streamlining, from pulling all of these resources together to be put into a well thought out comprehensive plan. Consolidation, a phase 2 plan, we call it. That was a solution for them, bringing all the resources together. Everything you have, every dollar you have affects each other. Learn how it all comes together holistically to help you retire with dignity and confidence. And that's done through a comprehensive retirement plan.
Abe, let's continue this conversation about the economy for this year because, the predictions started back in Halloween. You gotta go back and the talking heads began as they always do. Investment strategist Joe Tanius is excited about the possibility of more interest rate cuts, higher earnings, and a gradual broadening of the market beyond tech. But he does also have some concerns. And this is what he was telling CNBC about what's making him nervous for this year.
There's a lot of anxiety about a bubble, about what's happening with tech and what's happening with AI, a lot of this concentration. Of course, inflation. The reality is inflation is likely to move higher, at least in the earlier part of the year, and that may certainly pour a little bit of cold water on hopes that the Fed is going to come out and cut monetary policy perhaps more aggressively than we'd like. So make no mistake, there are a lot of things to be concerned about. But I think about where we are today relative to where we were just a few months ago, and I think the risks have come down materially.
The economy is always going to have moving parts, Abe. So what can retirees do so that they're not lying awake about it every night, stressing out about it all the time?
Yeah, look, you can wonder and hope that things are going to work out. Like you can wonder, am I going to be okay? You can hope that you are going to be okay. And you can wonder if, the next downturn or whatever is going to happen that could spook the markets is going to affect your portfolio and life savings. Or you can simply take control, take action. If you're working with an advisor right now, make sure it's the plan that you need that's going to meet your needs for the next 10, 20, 30 years. If you're not working with an advisor, you're not 100% confident in your current retirement plan, give us a call and give us the opportunity to give you a second opinion on your life savings. It's super important. So you can let the markets and whatever's out there in the news kind of control and dictate what's going to happen to your financial future, or you can take control. The choice is yours, and we obviously recommend taking control, right? It's your life savings. It's everything you've worked for your entire life and career that's going to or should last you the next 20, 30, 40 years until you ultimately pass away. And you want to enjoy this money without fear. A lot of that added confidence comes from having a plan. So, I always think it's interesting when you hear all of the, predictions about what the markets will do. Because sometimes, everyone predicts that market's going to be up and have a great year. And then sometimes those are the years where you have really bad years, right? And here recently, over the last handful of years, there's predictions for maybe a downturn and we're in a bubble, and the markets do the opposite. I mean, look at the resilience that the S&P 500 and the markets had last year, given all the tariff volatility. The S&P ended up around 16 or 17%, something like that for the year. Now, it comes with a lot of risk. That index has wild swings. It comes with a lot of risk, and not the type of risk, in our opinions, that you want in retirement. You want stability in retirement. So we just helped a family out of Leesburg, Virginia. They've got $3 million accumulated for their retirement. They're retiring in 1 to 2 years. He is 70. She's around 68. They're that classic 60-40 allocation when it comes to their life savings. They're comfortable, taking on that risk as they enter into retirement. Okay. And one of their biggest concerns, because they don't have, $10 million, they've got $3 million, and a 30% loss, a 40% loss could really eat into the retirement. They want to protect and preserve what they have.
Right.
They're also concerned, with the husband being right around the corner from RMDs, required minimum distributions, distributions in general from the retirement plan, retirement income. Look, everyone knows how to sock it away, especially in this DC metro area. A lot of confident, disciplined, prudent, and educated investors that just are disciplined for a long time, and then they wake up and they've got $3 million, $5 million bucks. And the same for them, $3 million. And so they were mostly concerned with, well, we're here, we don't want to blow it. We want to protect it and preserve it from all the risks that can mess this up because we don't want to have to go back to work. Mm-hmm. The solution for them was a phase 2 plan that not only continues to offer the growth potential and the growth that they need to get this money to last them the rest of their life, but it also protects and preserves the life savings from large loss and volatility. Now, look, large losses are one of the greatest things that can destroy a retirement. If your portfolio is down 30 to 40%, I mean, remember 2008, long time ago, had you retired at the beginning of 2008 or maybe 2007 and you were taking on a lot of risk, had a lot of money in stock, a lot of people had to go back to work. So simply eliminating large loss. Now, we're always, of course, going to lose money in the market from time to time when the markets are down. Eliminating large loss, like large loss, 30, 40% negatives, can absolutely destroy a portfolio. We want to limit loss.
Okay.
And we do that by limiting volatility and creating stability. We showed this couple out of Leesburg, Virginia, how we can do that through our portfolio X-ray and analysis. Find out what you have invested, how you're invested, if any changes need to be made for this next season of your life.
Abe and his team, they are here to help you do that. So it's theretirementkey.com to start the conversation, or you can just click on the links we've got posted in the show notes.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com. And join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.